Well, good afternoon, traders. And if we have a look at the index markets, I think that's a really interesting one because we are seeing a sea of red at the moment. Certainly, if you have a look at our opening calls for what's going on in the US, we've got the Dow down 54 points. And in Europe, at the moment, we're turning to the European Open. We've got the DAX down 94 points and the FTSE down just slightly less, down 24 points or so. But it's really the Asian markets which have driven that negativity that we've been seeing in those opening calls. We've got the Japanese market down, well, about 1.6% at the moment, 340 odd points. The Chinese markets are down a touch. We've got a pretty flat market in Australia on a relative basis, and that market seems to be outperforming there. Banks have been seeing a bit of love recently, and that's something that's holding in our market at the moment. In terms of the data flow, really, you've got to have a look at what's been happening in Korea. We have seen them coming out and cutting their GDP forecasts down to 2.2%, but they've also come and cut the 7-day repo rate down to 1.5% from 1.75%. That was not expected from the Korean Central Bank. We don't see a huge amount of retail traders looking to trade Korean assets. I think is the most important thing is part of the reason they've done that is not just because of the spat that the rise in tensions that we're seeing between Korea and Japan, but more about the external growth story, which is something the Bank of Canada, the Federal Reserve, and the Reserve Bank of Australia have talked about. And it could be the reason why the Federal Reserve actually go out and cut 50 basis points in the July meeting. But if you have a look at Korean exports, which a lot of people do see as a bit of a leading indicator for global growth, they've been in decline recently, and that's something that the MSCI All Country Index, which this chart here from Morgan Stanley shows, is a fairly decent barometer of how equities are seeing the external demand picture. But the Bank of Korea have cut rates. That was not expected. It was not consensus, and that potentially shows us something about what's happening in these markets. You can also have a look at this chart here, and you can see what's been happening with today's Aussie jobs numbers. I think if you have a look at the fact that Aussie dollar is now trading up about 22 points on the session, or 22 pips on the session at 70.32, you can see that the numbers were pretty good. But how does this play into the RBA's stature of cutting rates if needed, quote unquote? You can see that the participation rate has held firm at 66%. That was expected to decline a little bit there. You can see that the unemployment rate has stayed firm at 5.2%. That was kind of expected. But then if you have a look at the mix of full-time to part-time jobs, we've created 21,000 full-time jobs. We've seen about 20,000 part-time jobs lost. I think on balance that's a reasonable number. It certainly doesn't give the RBA any scope to be looking to ease anytime soon. And then if you marry this up with what is a reasonable kickback and improvement in the NAB business confidence numbers, you can see why the Aussie dollar is probably one of the better performing currencies on the day. In fact, if you're looking at the currency markets and the boards we can see here, if you have a look at the boards, you can see that dollar yen is trading 107.73. There seems to be a bit of a bid coming back in the yen, but the dollar's down pretty much against all G10 currencies at the moment. Maybe that's a reflection as we head into US trade. We do have a little bit on the data front. We've got jobless claims, we've got leading indicators. We're probably not expecting that to be a major driver of markets. What you do want to have a look at, though, is the speech that comes out from New York Fed President John Williams at 4:15 Eastern Standard Time. So we're going into the back end of the US trading session. John Williams, one of the core members of the Fed, will give his view on monetary policy. And given the market's now got about a 34% chance of a 50 basis point cut, he could really, if he gives an indication of an external demand issue, give us pushing up towards a 50-50 outcome for that 50 basis point cut. Again, the dollar could struggle in that situation, and gold, which has been heavily traded by clients, could really break out. We've seen a little bit of selling coming through. As you can see, the gold price 14.22 at the moment, but it had a decent move up yesterday, I think largely as a result of some weaker inflation expectations, real yields falling a little bit. But I think if we do see that John Williams giving some indication that he's prepared to cut by 50 basis points, which is a big if, I'm not saying it's going to happen, then gold prices break out, and I think a lot of people will be jumping on board there. So an interesting session. If you look at the way things are shaping up at the moment, it does seem to be a bit of a negative tone coming through. Maybe that's a reflection of earnings, but let's see what John Williams says. I think that's probably the highlight of the night.